welcome back to the show. I'm Mel Schaefer, and today I have the pleasure of being joined by Mark Blick, the CEO of Diginex Limited, a software company using advanced technology to help businesses and governments tackle ESG, climate, and supply chain challenges. Thanks so much for joining me today, Mark.
Thank you, Mel. It's a real pleasure to be here.
So to start, for those who might not be familiar with the company, can you tell us what Diginex does and walk us through the business model?
Diginex is a sustainability regtech company, and we have a real focus on helping companies of all sizes, and this was really important to us, meet their regulatory reporting requirements or investor pressure disclosure requirements around ESG, climate, supply chain disclosures. And we'll go into a little bit more depth later on what that means from an ESG perspective. But it was really our conviction that in order to have an impact, this type of reporting ability needed to be available to all companies, no matter the size, the budget, or the sophistication level. And we saw a big gap in the market with regards to bringing those types of tools to companies all around the world.
Right. So Diginex went public just in January of this year, and it's already up over 550%. And you now have a market cap of about 1.1 billion. Is this valuation justified?
I like to think the market reflects where the company is, but I think it's important also to note that we are in, even though ESG is a term, however it may evolve, or climate reporting or supply chain is top of mind for many companies right now. Really, we're in the early foothills of the industry, and the industry itself is taking its own nascent steps as it tries to understand the value of ESG and climate reporting, the types of regulations that will force companies or mandate companies to report, and the expectations of society broadly has of companies as they engage with both internal and external stakeholders. So this is a very new industry. And not only that, we're also leveraging very new technologies like AI to help companies when they're going through and trying to drive efficiency gains or make adoption easier. So for us, again, there's a tremendous amount of greenfield space for the industry and ourselves to move into.
Yeah, so Mark, we're in an environment where ESG and climate concerns are becoming more central, but many investors still struggle to understand how these themes translate into financial value. What's the biggest misconception, do you think?
I think, and I talk about a lot, that ESG it's a very broad term, and it means a lot of people to a lot of different things to a lot of different people. If you're familiar with in psychiatry, you have the Rorschach test, where I show you an ink blot and you think it's a butterfly and I think it's a hippopotamus and somebody else thinks it's a cloud. So everybody has a different interpretation of what that is. And the ESG right now is the same thing. If I show it to a sustainability manager at a large corporate who may have been an Amnesty international activist in his or her 20s, ESG may mean meeting climate target goals. If you show it to a CFO at a company, it may mean not getting in trouble from regulators. If you show it to investors, it's around de-risking the companies that they allocate capital to. And so for us, we try and demystify it as much as possible. And it doesn't sound as exciting or interesting, but we try and frame it in terms of non-financial risk indicators. So when you look at any company, of course, you have a very practiced lens to look at it through profit and revenue and EBITDA and so on and so forth. But also you need to understand, what risks do companies face from a non-financial perspective? What are the chances of its supply chain being disrupted? What are the chances of there being a healthcare scare in manufacturing facilities across a specific geography? What are some data governance issues that they may have? All of this falls within that broad umbrella of ESG. And for investors to be able to look at companies, and it's generally a truism that a well-governed and a well-run company is a good representation of a well-run, well-governed company. And ESG helps give investors better clarity as to how companies operate.
Right. And Diginex has also had a lot of recent news, which shareholders love. One piece that was announced on June 30th is major AI-driven enhancements to help companies. Can you explain why these improvements are so important right now?
Yeah, they're really important. So if we look at something like sustainable finance, which is we spend a lot of time helping companies get access to alternative forms of capital, which are often cheaper. And there's a lot of capital that's been earmarked for sustainable finance. And through that, you get a lower rate of on basis points for capital that you're looking to deploy for specific projects. The issue often can be the cost of compliance can be high. You've got to hire additional staff. You've got to go through a huge data collection process. It takes a lot of time and effort. It takes a lot of political will and capital to get it through an organization. And so many companies may come to the conclusion that, yes, there is advantages to sustainable finance, but frankly, given the cost of capital, it makes it a harder debate to win internally in a company as to whether you should pursue that path or not. For us, we're looking at how do we leverage new tools like AI that will allow companies to decrease the cost of capital as much as possible. In fact, we've been able to do this for a while. If I look at the traditional journey of ESG or sustainability reporting, it's very manual. You have a lot of documents you collect. You have a lot of analysis of those documents and data extraction and report writing and creating a summary and a narrative around the data that you're putting into the report, and all of that requires people and effort. Through that new announcement, which you saw, we're just about to launch a feature which allows us to ingest documents and then within minutes write a company's report for them based on the documents and data that they've uploaded to our platform. And we can also do that through specific lenses and voices. So you can choose, I want to be a CFO talking to regulators. I want to be a sustainability manager talking to a broad ecosystem of people around my organization. So we've taken a task that would have taken weeks and months, and now we can complete it in minutes and hours. And that's a significant improvement. For us, the real important balance is, we've got the efficiency gain, is how do you also maintain authenticity? I'm sure if I give you some text generated by ChatGPT, you can probably spot it now. We've all got quite a good filter on ChatGPT written language. And similarly for us, we don't want to put a tool to market and suddenly you have 10,000 companies all writing reports which look exactly like each other, and everybody can tell that they've been written by some form of AI engine. So whilst we're driving efficiency at companies, we're also focusing really strongly on how do we retain the authenticity of the company. And by doing that, you then retain the value in the work that's been generated through our platform. And that's going live next week. So we're really excited about that.
Fantastic. Another piece of recent news I wanted to touch on, Diginex was just added to the S&P Global BMI Index, which, I mean, it gives a lot of credibility to the company. Can you talk a little bit about what this means for investors, that the stock will have more visibility?
You hit up on the word there, credibility. So I've been with the company since the beginning, since we were a small startup, and we were searching for credibility because people didn't know us. Especially we have a global client base, and so companies around the world that we were selling to may or may not have known who we are as a previously small private company. One of the reasons why we listed, there are several, but one of the reasons why we listed in January on NASDAQ was to enhance our credibility, so people will be able to see who we were as a company, see how we were run, and that really has helped us. It has helped us attract capital. It has helped us attract clients, as people recognize the type of company who we are and can see very transparently the things that we do. Being included in this index is another step on that branding of credibility, so everybody can see how we perform, how we do, the types of things that we like to focus on, and continues on our journey of creating a narrative of an institutional company that focuses on ESG, sustainability, and climate reporting.
Yeah, so talking a little bit more about that, a lot of investors may be wondering about your approach to partnerships or even like M&A. Can you share more about how collaborations are going to play into your strategy and growth plans?
Yeah, there are two separate points there. One is the partnerships one, and then second, the M&A. Partnerships for us was very obvious. They're a force multiplier. So if we sell B2B, which we do, we sell to our clients. We have a sales force that do that. But that can be slow to get scale. But if we partner with people like Forvis Mazars or Russell Bedford or Baker Tilly, those are professional services firms, or people in the banking sector like HSBC, who we've had a global partnership with for some time. That allows us to get scale at a much faster rate. So we are investing more and more in these types of partnerships to allow their clients to get access to our technology and use them as our own distribution channels. That's really important for us. And then from an M&A perspective, we've had a hypothesis which has a strong degree of conviction that this industry is primed for consolidation, that there are many companies who raised capital 3 or 4 years ago who are private, but now there's a completely different VC market right now. It's harder to raise capital, and VC and valuations are difficult. And so we're offering them an alternative route. We're offering them a route within a public vehicle, and that has been very attractive to a number of companies. We also believe from the demand side that clients and customers, that they're getting, I'd call it login fatigue. So they need to have, we've heard this many times, so I need to have 20 different logins to 20 different platforms in order to do everything that I need to do within climate and sustainability. And it's a real pain. And so what we're trying to do is bring those together into a single platform as much as possible and remove that as a headache for major customers.
Yeah, and the ESG landscape, as you've sort of touched on, is moving really quick. How do you see these shifts shaping Diginex future product development?
We have massive tailwinds in our favor. This is something that regulation has been driving. Regulation recently has been a little bit of 2 steps forward, 1 step back, but nevertheless, it's forward in its direction. I think that what happened in Europe around the omnibus and CSRD was actually a positive move, because the previous version, I think, was quite overwhelming for a number of different companies. And we look at both implicit regulation and explicit regulation. And so explicit regulation is very obvious. If you're listed on many different stock exchanges, if you're active in certain markets, you have explicit regulation that mandates that you report. And so sometimes people will say to me, well, it's only large public companies that have to do this type of reporting. And I'll say, actually, not at all. Most companies who report for ESG or sustainability reasons are actually private companies. And they do that voluntarily, or they do that because they have implicit regulatory reporting requirements. And by that, I mean they often supply into large multinational companies, and those large multinational companies will then push their mandatory reporting requirements down their supply chains to their suppliers. And if you want to supply into a Fortune 500 company, you not only have to compete on price and also quality of product, you also have to be transparent on things like emissions. And that's really important to the way in which we see this industry grow. So I think ESG has to be a mixture of bringing people by hearts, and so getting people to do this because they want to do it and because they realize it's beneficial for not only themselves, but also for society, environment broadly. But also there's a little bit of stick in there as well, where regulations are just bringing it front and center in the minds of companies. I often say that ESG doesn't stand for environmental, social, and governance. It stands for earnings, survival, and growth. And if I can pitch that to companies, that they will earn more because I'll win more clients, they'll survive for longer because they'll get access to cheaper forms of capital. Ultimately, they'll grow. You see a lot of light bulbs going off in executives' heads as they understand that this is an opportunity to really grow as a company.
Yeah, and so just lastly, Mark, as you keep innovating and expanding, and it's really interesting what you've been talking about. What should investors and customers be watching most closely from Diginex in the coming year?
I think the move from ESG reporting into the broader sense of data management and AI. The true value of ESG data is not the sustainability report, well, I believe anyway, there's not the sustainability report that companies generate, which may have a limited audience in terms of people who are going to read it cover to cover. It's more around, well, what can I do with the data that's been generated and how can I take actions based on that? I think one of the issues with regulation that is being addressed, which is good, but one of the issues with regulation was turning it into a compliance exercise where companies would spend 99% of their time within the ESG initiative on collecting data and reporting. And I think if that is the objective of ESG and sustainability, then it's a real missed opportunity. The objective and aim of ESG and sustainability should be companies engaging in change management and fundamentally changing the way in which they operate, either from an environmental perspective, lowering their emissions, using less water, increasing recycling, whatever it may be, or on a societal perspective, which may be the way in which you treat employees at work, reducing workplace accidents, and so on and so forth. And so for us, allowing companies to really leverage the data that they've generated, understand things like benchmarking, gap analysis, target setting, that's the real exciting stuff. And that's where you measure progress and see companies Of course, you need to spend time collecting data and reporting, but that should be no less than 50% of your time. We really rather prefer companies spend most of their time actually doing stuff and improving the ways in which they operate. And that's done by healthy engagement with data.
So for your shareholders, are there any milestones that they should be watching upcoming in the next 6 to 12 months?
Obviously, we're pursuing a very active course of strategic acquisitions in the industry, and I think that's going to be a big focus of us this year. And then integration of those companies, and then within the product as well, we're releasing lots of new exciting features, like the AI one that's coming out next week, and that proactive roadmap of features will continue throughout this year. And we've got some really exciting stuff coming.
Fantastic. Well, thank you so much for taking the time to join us today, Mark.
My pleasure, Mel. We're really happy to be here.